Good people, how are you doing? I am one of you, the fundamental people of the material gods. And as I promised earlier, I said I am going to be doing a video where I will be showing you guys how I trade fundamental analysis and how fundamental analysis might be the game changer in your trading career if you do trade the financial markets, which is forex, which is the stock market, which is the bond market, right? So I've written some notes here which I'll be sharing with you guys so that you get a grasp of how I analyze and how I consistently become profitable over time when I learned this trick of trading using fundamental analysis, right? So you might have heard about economic indicators. You might have heard about fundamental analysis. I'm not going to tell you what fundamental analysis today because what you have to do is you just have go on Google or search away what is fundamental analysis, and then you get the grasp of the basic about fundamental analysis. But when we talk about economic indicators, there are three main important economic indicators which the Feds uses to set interest rates. You might be asking yourself again, which are the Feds? What really are the Feds? The Feds, let me tell you about the Fed chair. You all know him. He's the guy who have the most expensive good afternoon in the whole world. His name is Jerome Powell, right? So the Feds are the referees of the financial markets when it comes to the dollar, right? So the economic indicators I'm talking about, the three most important ones, is growth, it's inflation. Inflation may come in the form of CPI, may come in the form of PPI, and it's also what we call employment. Employment may come also in the form of NFP, unemployment claims, and all the other employment indicators, right? So moving on, whenever the Fed is giving a speech, Jerome Powell is giving his speech, you hear fundamental traders saying, was he dovish or was he hawkish, right? And you are confused. You don't know what a dovish market is. You don't know what a hawkish stance is, right? So a hawkish stance, it just means the Feds are tightening the monetary policy. What happens when they are tightening the monetary policy? They are increasing the interest rates. So what happens when the Feds are increasing interest rates? It means we have got a stronger currency, right? And then likewise, a dovish stance represents when the Feds are looking forward to cut interest rates. What happens when interest rates cut? When interest rates are cut, money flood the economy. If money floods, it's not considered inflation. So basically, the currency will lose its value, right? So moving forward, okay, have you ever wondered, you are trading, you are a technical trader, right? You know how to analyze the markets, you know how to use price action, you know how to use smart money or whatever strategy you use. You are very good at it, right? Your psychology is top level. Your everything you do, your risk management, risk tolerance, everything is top level, but you're still not making money. Have you ever wondered why you are in a trade, you're floating 30, 40, 50, even 100 pips in profit, and then all of a sudden the market crashes or the market shoots up and you lose money, you blow your account, you hit your stop loss, and you wonder why or how did the market move like that? It's because of fundamental analysis, right? So like I always say, like I always advocate, fundamental analysis move the market, and the technical side of trading is used for entries. So I'm going to give you steps on how to use, to your own advantage, to use both fundamental analysis and technical analysis so that you can come up with one working strategy which can make you consistent profit. Like the first step is to understand and to accept that fundamental analysis move the market, because all the big market movements are due to fundamental analysis. So the first step you do is to find the macro fundamental bias. You need to say good news when it comes to the directional bias of the market or of any pair you are trading. Right? After finding the directional bias of the market, you then go to your technicals and then you analyze your technicals tipping to the direction you could have already been given with the fundamental analysis, right? For starters, yesterday we had the US CPI, US Consumer Price Action, right? And all of my technical brothers were saying gold was going to buy, right? And then luckily enough for them, the CPI value came in lower than what was expected, and we ended up having a weaker dollar. So when we have a weaker dollar, it means we have got a risk-off market. When we have a risk-off market, what happens to safe havens? What do we mean by safe havens? Safe havens, we were talking about assets like silver, assets like oil, assets like gold. They appreciate in value. How do they appreciate in value? Gold will then buy if we've got a risk-off market. So what you do is you already know the direction of the market from the fundamental perspective, from the consumer price index perspective, right? So you then go to your technicals, you analyze your technicals, whatever it is, morning stars, your double top, the double bottoms. But luckily enough for us, yesterday gold had created a double bottom, and it also created a tweezer bottom where we would want this one small candlestick with a long wick to the downside. That was showing some bullish momentum, meaning to say our fundamental analysis and our technical analysis were both agreeing on the directional bias of a buy on gold. That's what we call an A+ setup. When you see that kind of a setup, it means you are going to be profitable. That trade, they've got a high probability of making money rather than when you're only using technicals or you're only using fundamentals. These things, they work hand in glove. Fundamentals, it needs technical analysis. Technical analysis, it needs fundamental analysis. So you don't have to ignore one or more of these ways of analyzing the markets, right? So what else can we look at? Again? Another thing, FOMC. I told you guys that the Feds, right, are the financial referees, right? So the most important thing is about industries, right? And it's also about what you call the fiscal policy or the fiscal dominance of a country of an economy, right? Fiscal dominance or a fiscal policy, it just means how much amount of money is going to be printed by the federal government. So if the federal government prints a lot of money, so I want you to note this, Andrea. My Fed shares differs. Last week, if you trade USDJPY, you could have noticed that when they changed their prime minister or when they changed their governor, his name is Ueda, I think, right? When they changed their governor, USDJPY shot all the way to the sky. But his fiscal dominance specializes or focuses more on printing more cash, right? Likewise, in America, right, they are promising that in 2026 they're going to print $1.26 trillion. We're talking about trillions here. $1.26 trillion in cash in the United States of America. So if we put more cash flowing, paper cash, it means the currency is going to lose value. Because Mariega Wandisa in the economic data. And it's Mariega Wandisa currency no lose value. And then I wanted to talk to you guys again about tariffs and geopolitical things, social things, and even politics in general. How does it affect the financial markets? Right. So the thing is, most traders think fundamental analysis is all about the economic indicators or the news events you see on sites like Forex Sector, right? That is just a tip of the iceberg when it comes to fundamental analysis. Fundamental analysis includes what we call geopolitical events, what we call political events, what we call social events, Middle East events, trade wars, even wars between, like for example, Ukraine and Russia. It impacts the financial market. In what way? Right? If there's a war, let's say for example, if there's a war, right? We all know we all know if let's say hypothetically speaking, Ukraine is an ally of the United States of America. And the United States of America and the Ukraine is going to war, is at war with Russia, right? So, ideally speaking, the United States of America is supposed to help Ukraine either with money or with weapons or with any other assistance they can give to Ukraine. It's not affect a budget because they're going to use money to fund the war. That will result in the dollar taking a hit or in the dollar losing value. And when that happens, what happens to gold? Remember gold, the JPY currency, and then the Swiss francs currency, the CHF currency, they are all safe havens. They're not better currencies. And during a risk-off market, safe havens, they appreciate in value. Meaning to say they buy or they gain strength, right? So another thing you guys need to know is to differentiate between a risk-on and a risk-off market, right? And I also want to talk about FOMC. This is like the interest rate of the United States of America. And we've got the FOMC meeting on Wednesday next week, right? And as I said earlier, the Feds are the financial referees of the financial markets, right? So when I say what do I mean when I say the government of the United States of America was or is still under lockdown. So when it's still under lockdown, it means some of the economic indicators which the Fed uses to determine or to make decisions on how to either ease or how to cut their interest rates were not made public or were not released. We didn't have no NFP. And as I'm hearing, next month in November, there won't be no CPI and there won't be no PPI. And we don't even know when are we going to have unemployment claims, when are we going to have NFP. So the employment data is not yet out. We only have the inflation data. So when that happens, from my own perspective, I think, yes, the Feds, they are data dependent, and we expect them to be cutting interest rates, to be lowering their interest rates. But I don't see that happening on Wednesday because they don't have enough data. So they cannot make their decisions based on expectations or based on hearsay. We don't know how the employment sector is doing right now. Because Atina NFP, Atina unemployment claims and unemployment benefits data for nearly the past month. So they cannot make their decision based only on inflation data. So from my own perspective, I think on Wednesday, the Feds are going to keep they're going to pause their interest rates and leave them as it is. Then what does it mean for the dollar, or what does it mean again for USD JPY? What I think is on Wednesday, XXX USD pairs they're going to sell, and USD XX pairs they're going to buy. I'm seeing a stronger dollar on Wednesday during FOMC because I think the Feds are going to ease. They're not going to cut rates. They're not going to increase rates. That's what I think. That's just my thoughts. So on the next video, I'm going to be talking about fiscal policy. I'm going to talk again about the relationship between the bond markets and the forex markets. I'm going to talk about fiscal dominance, and I'm also going to explain to you what a risk-on market and what a risk-off market is, right? Because, like I said, FOMC, you can trade FOMC by only looking at the US 2-year and 10-year bonds, because they are the first to react whenever FOMC is released. So keep an eye on Jerome Powell's speech at 8:30 Central African time. That's when you're going to see will they continue to ease? Will they continue to raise interest rates? Or will they cut? And if they are cutting, with which level? Thank you for your time. I am all of you. The fundamental people. Make sure you hit the subscribe button and follow me on Instagram, follow me on Facebook, follow me on TikTok again as I am all of you, or just Matabela God.